Welcome to Investors Insights, where today's topic is bull market and jobs. Good morning, guys.
Morning, Mom.
Obviously, the bull market is now 9 years old. It hasn't always been pretty.
Yeah, definitely. You say 9 years, and people think that's been straight up, but
Yeah.
people forget. In 2011, we had really a down year, especially if you don't count dividends. And then 2015, the stock market was down, the bond market was down. So it's all about how you define a bull market. Really, it's not all up and up from here. But then also, markets definitely bull markets don't die of old age. They die of typically people making mistakes. So we have to be watching this closely.
Yeah, well, we're enjoying it while it lasts, though.
That's for
it won't
sure.
last forever, so we're enjoying it now. But also jobs. On Friday, we had a really strong jobs number. Really happy about that. That just continued to shows that the economy is really strong. Trey, talk about the aspects of that.
Yeah, kind of wanted to look under the hood, some real numbers there, because the top line number was fantastic. But that's not necessarily what's important. What's important is how are people getting paid. And so if you saw the wage growth, that was 2.6% year over year. That's good, but not great. But then if you add in the fact that people worked more hours, that gives you a north of a 4% growth in earnings. So they got more per hour, and then they also worked more hours. And that's really what you want to see, because that shows that we're really not at full employment. Because if we were, then people wouldn't be able to add hours or add employees. So we saw the unemployment rate stay flat, and people come back to the economy, which was great.
Yeah, labor force participation rate was key there.
Yes, yeah, that's exactly
very
right.
important. And Ashley, you had some more things to say about that.
Sure. Actually, on the participation rate, 653,000 people off the sideline back into the job market in February. That's a big number. We hadn't had that in quite a while. In addition to that, across all of the sectors, every sector grew but government. Government was the only one that was smaller. The interesting thing to us, though, there's a little bit potentially of a downside in it, in that 33% of the goods producing industries grew, and that's great. That's people making stuff like this table, good multiplier effect. But the tariffs could potentially slow that down. Right. And we've got to watch that a little bit going forward, because you don't want to undo all the tax
benefits,
the deregulation, because across aluminum and steel, it's a huge amount of input cost to a lot of industry. So we don't want to have the tariffs kind of undo and slow this job growth down, because all of a sudden with what we had was good, now we've raised the cost back again for input for a lot of industries.
This is a great pre-tariff jobs number.
Correct.
Going forward will kind of be
but we need to watch that, because that could be a drag.
Yeah. And also next week, the Fed meets, so that's going to be very important. This week, we have a lot of big economic numbers coming out: inflation, retail sales, manufacturing, and housing starts. So this week will be loaded with information as we wait for the Fed next week. So thank you for watching. As volatility continues to pick up, please call us or email us. We love to hear from you. And thanks for watching. Have a great week.